Good morning. My name is Ole Fet. I'm the CEO of the BWG Homes company. I'm going to present the results for the second quarter together with Arnt Eriksen for you. And we start with the highlights. We are very satisfied with the results so far. In Norway, they are pretty good, and we are improving in Sweden. We have growth in revenues, results, and sales in Watne. We have continued improvements in the revenues, results, and sales in the BWG Homes AB. And our new company that we bought in April this year, Kärnhem, we are also happy to present the first result from them today. The operational EBITDA margin is 12.3%. When it comes to the market condition, we think that they are very good in Norway. They're still good, and maybe a little bit flattened out, but anyhow, they are good. We think we have positive trends in Sweden. Customer appears to be returning to the market, even if it's some geographical variations. But sales in Stockholm and Gothenburg, our most important market and the biggest market in Sweden, they are increasing. And we believe that the underlying demand both in Norway and in Sweden, it's very good. So far, Mr. Eriksen, it's your turn.
Thank you. We're quite pleased to present the second quarter for 2013. It's been a good quarter for us, with quite some new things coming up also with this Kärnhem acquisition. So start by going through the figures, the operational figures for the second quarter. Revenue increased by close to 16% to 1 billion NOK, and the EBITDA for the second quarter of 130 million NOK. That's an increase of 17%. Yes, the Kärnhem company is with us for the first time, so they contribute with 2 months of profits here, around 13 million NOK. Looking on the cash flow, we are quite pleased to see it's improving. Positive cash flow from the operations in the second quarter, 48 million NOK. Quite a big improvement from a year ago levels. New orders in excess of 1 billion. Very good sales both in Norway and also in Sweden compared to history. Increase in order income of 16%. The order backlog then comes to 1.8 billion, 8% increase from same quarter last year. Units in production, we started to present these figures in the first quarter of this year. Now we have, or at the end of the second quarter, we had 1,226 units in production, an increase of close to 4% from a year ago. Number of employees increased with approximately 50 from the first quarter due to the Kärnhem acquisition. We also have a summary of the first 6 months of the year, and on these figures we see that the revenues are up close to 14%, 1.9 billion. EBITDA 254 million for the first half of the year. So it's an increase of close to 25%. EBITDA margin 12.7%. We had a very strong margin, particularly in the Norwegian operation in the first quarter. It's also good in the second quarter. Cash flow has been an issue which we had talked about before. On the first half year in total, it's on the operations 165 million of cash tied up in working capital, basically. Lots of this linked to investments in land. New orders for the first half year, excess of 2 billion NOK, increase of 15%. And the order backlog have been mentioned earlier. And then the number of employees is still, of course, the same. So then we have some graphs here illustrating, say, the quarter and compare it with the same quarters on the previous years. And as it appears here, the second quarter of 2013 is a very good quarter for us. Looking on these years, it's actually the best we have seen. Part of this driven, of course, by Kärnhem, but anyway, very good, both revenues and results. New orders also see an increase and a good second quarter. And maybe more important for us, actually the order backlog increasing on a quite substantial growth in that. A little bit more about cash flow and debt. The details you will find in the report, of course, but in summary, the cash flow from operation was positive with 48 million. Contributes both in Norway and Sweden. On the investment side, it's very much influenced by the Kärnhem acquisition. Net cash flow on the investment in Kärnhem was around 23 million Swedish kronor. On the financials, we did amortization of installment on the loan of 25 million in the second quarter. And the rest of this is basically drawing on project financing. Yeah. So we have also specified here that in the second quarter we made payments related to land acquisitions of around 83 million NOK. For those who remember the first quarter, we invested close to 140 million. So we see sort of what we would like to see in this, a reduction. This brings the net interest-bearing debt for the group to be actually in line with what we saw in the first quarter. It's reduced by 2 million NOK, and the level is 1.7 billion NOK. Then some comments about the IFRS or the balance sheet, and these are the IFRS figures. No big changes here. The most important change to know about is the Kärnhem acquisition again. Intangible assets increased with 50 million Swedish kronor related to Kärnhem. Apart from that, I just mentioned that we have a good position financial-wise and a solid equity ratio of excess of 40%. Then, as we have spoken about many times before, we have these differences between the operational reporting and the IFRS figures, or the consolidated figures. And these are the IFRS figures for the quarter and also the first half year. Basically, it shows much of the same as the operational figures, a clear improvement. So revenues based on this kind of reporting comes up to an increase of 26%. And the EBITDA at 119 million, it's an increase of 24%. And the earnings per share for the quarter was 50 öre in NOK. At the first half year, growth in revenues of 5% and the EBITDA at 189 million, more or less in line with the first half year of last year. That was about the figures. Now Ole will take you through the operations.
Thank you, Arnt. I will take you through the segments. In Sweden we have two, the Watne BWG Homes Group AB and Kärnhem. And we take Norway as the last segment after that. For Sweden, we believe that we have seen a continued positive trend when it comes to the development in production revenues and result in the second quarter. As I said to begin with, we have improved sales, especially in Stockholm and Gothenburg. I think it's important for you to recognize that Stockholm is definitely the most important market in Sweden. It's about they have a growth that is about one Gothenburg per every 10th year, And of course, Stockholm is important for us. So when that functions well, we believe that's very good. It's good for us. We have a focus on residential project in growth regions, and as we have in our corporate, we said that we want to produce affordable homes and in the outskirts. So that's exactly what we are about to do in Sweden. We have the first housing cooperative projects for sale at the moment, and we have more cooperative projects coming on in the second half and further on out in 2014 and so on. We believe, in a matter of fact, that this will be an important part of what we are going to produce and what the type of project going forward in Sweden. In addition, we have some new products coming up. For about 2 years, we have been talking about standardizing, scaling the factories and so on. So what we have come up with model-based row houses, and we are also able to produce multifamily houses up to 2 floors with those box units. And we call the concept Start Living. And right now we are about to make some changes in our factories. So we are ready to produce the first units of the Start Living and this project in January 2014. But anyhow, we are very pleased to recognize that the sales are looking good, and we are satisfied with the levels that we see at the moment. And by bringing these new products to the market, we believe that it will inflect in a positive manner on the result going forward, especially due to more standardizing of the products and even scaling the factor of scaling effects in the factories. When it comes to the figures for this segment, operating revenues 348 compared with 305 the same quarter last year. The EBITDA margin 27 million, up more than 29%. Order intake 431 compared with 371 last year. The order backlog, it's about 1 billion. And the number of units in production is about 200 units at the moment, compared with 178 the year before. And the number of employees are 374, up from 355. So we are very satisfied at the moment with this Swedish part of us. When it's come to Kärnhem, this is the brand new company, and we bought it in April. And I think the headline for this presentation is that Kärnhem is about to deliver as we expected when we bought it. It means that they bring into the market a lot of new good projects in the cooperative segment, the BRF as we also call it. And we also, by this acquisition, we actually doubled the land bank that we had from before. We had 1,500 in the BWG Homes AB, and now we got another 1,500. In addition, Mjølner's Høyd, we was able to start it during the second quarter. That was due to that we sold it out. It's a popular project. It's downtown in Växjö, and we believe that it's important for us to get started there. And of course, Kärnhem, they consist of several skilled people. They have a very good organization. And so the most important thing, in addition to that, that they have several cooperative projects going on. Of course, they are into the market that we believe will be very important for us going forward, and that is the co-ops projects. When it comes to the figures, we have reported, and the figures are that we are aiming at the moment is for May and June. The operating revenues for this period is 60 million. The pro forma figures for the second quarter, 74, compared with last year, 69, positive, I believe. The EBITDA margin, 22.7% for May and June, 40 million. Order intake, 43. For this pro forma second quarter, 59, compared with 69 the year before. The order backlog 179, and we haven't the figures for last year. Number of units about 79, and number of employees 50. So the most important thing for us with the Kärnhem acquisition is actually that we are with this company also more focused going forward in the BRF market. And of course they have very standardized products, and that's important for us to aim at products that's like that. And then the last segment, Norway. It has been very easy to talk about Norway for several quarters, and that's like that it is today also. The second quarter is still a positive market. We believe that Norway are still in a good position, and the market will be good going forward also, especially for affordable homes outskirts the city centers. So we believe we will still see strong sales going forward. We think the margin are really they're good, and we believe it's going to stay like that also, and that's due to a lot of good projects, and we have skilled people, we have a stable working force, and they are very good in doing and making this project that we have done for several periods now. So the order backlog is at a satisfactory level, and of course going forward we will have focus on sale, and we will also have focus on developing our existing land bank and project. We believe that will be important. Another thing to recognize, our new CEO, Geir Solund, have now been in his new position from 18th of April, and it works out fairly well. Operating revenues 643 compared with 595 the year before. We have an EBITDA margin 16.1%, 103 million. I believe it's more or less the first time above 100 million. Order intake 614 compared with 566. Order backlog 624. Number of units in production 947. I think the drop from last year, we have several homes that the people have moved into, and we know that during the fall we normally start maybe a little bit more units than we complete. So I think it's at a satisfactory level. Number of employees 636 compared with 631, about the same. So headline from this segment: we are still satisfied, and it's strong result, and I think this is sustainable levels. The outlook going forward, we have seen improvements in the Swedish market and the BWG Swedish operations. We have entering new markets with housing co-ops and new products. We have several projects in housing cooperatives segment, the BRF, to be launched in both in second half of this year and into 2014. We expect to increase volume in the factories, and we have of course ongoing focus on programs that will make us and the factories and all that means something. We will be more efficient. When it comes to Norway, we have a high demand for housing, and it's still low interest rates. We have available credit facilities for customers, and of course we are focused on the sale and the running production. And of course we are in the affordable family house market, both in Norway and Sweden, and we're going to stay there. We believe that's a very nice place to be. It have been, and we believe it's nice to be there going forward also. So then it's just for me to wish you all welcome back in third quarter, 7th November 2013 at 11 a.m. Thank you.